Hello, everyone. My name is Dumitru Condrea, and today we're discussing about building startups without Silicon Valley playbook. We have a guest, Germain Bahri, who is the co-founder and chief growth officer at Zazu. And we invited him because Zazu is the product who is having a lot of challenges, the product that is developing in a market where, by sure, any kind of a playbook from Europe or United States are not working at all. Hello, Germain. How are you?
I'm good, Zima. Thank you for inviting me and allowing me to share a little bit of experience. Very excited to be here.
Yeah, let's start with the fact, what parts of so-called Silicon Valley playbooks or things that are working in Europe or United States are not working at Zazu? Because Zazu, as far as I know, is a product that is developing in South Africa, or it has a bigger coverage for different regions in Africa.
Well, there's many interpretation of the Silicon Valley playbook, right? What I can tell you is that indeed, right? It's although tech is tech, right? Wherever in the world you are, there's definitely a lot of nuances when it comes to specific parts of the world, especially emerging market and especially Africa, right? So I would say the idea that we had of just applying a lot of the learnings and purely coming in with a text perspective on something that works in a new market, especially in certain parts of Africa, is definitely the way it works here, right? There's lots of local nuances. There's a lot of specific and hidden sort of pain points that we've discovered. But I would say, in short, one of the main differentiating factor from the solution that we were part of, either in the US or in Europe, is that as opposed to solving for convenience and efficiency, right? In Europe, I mean, if you look at how you use your Revolut, N26, and so on, was obviously the experience was nice, right? It's much better. But in Africa, I would say in certain parts of Africa, you actually solving for impacts, right? For real problems, right? So that's one of the main, I would say, difference that we perceived in approaching on how to approach the pain point and building the product.
As me, basically, both of us were coming from. We had an experience in Solaris previously, and can you make a difference between developing products, developing different initiatives at Solaris on European market, and developing initiatives at Zazu as a co-founder on African market? If there is a huge differentiation, or when you go into and you dive deep into the roots, you see that basically everything is the same. Are there any difference?
Yeah, many difference. Well, the beauty, I guess, of at least when I joined Solaris, or the beauty of Solaris and the early banking as a service pioneer, is that they have built the foundations, right? They, set up sort of the first rails, right? Of the banking infrastructure, right? They relied also on a lot of fintechs that came with them, right? That were doing either card issuing, payments, and so on, right? So a lot of I would say the castle or the building blocks, behind running any sort of digital banking proposition were already made and ready to go, right? So this sort of reference to Lego blocks was very famous back then. It wasn't really the case when we arrived on the continent, right? Certain pieces were there, right? I must say South Africa was quite advanced actually when it comes to infrastructures and financial systems and infrastructure, but still a lot of these building blocks we either had to build ourselves or grow with the partners, right? So that's one big element of it. The second element is around licenses, right? So back to my time at Solaris, right? Licenses were, and I think are still flying around, right? It's quite easy to get some types of payment license or an EMI from anywhere in Europe and transport it, at least from a timeline perspective and capital requirements. And there's a clear pathway. Africa is very different. Some part of Africa, some countries have some type of framework in place, but not really enforced. Some don't have anything, so you can go a bit like cowboy style and build and then follow up with the regulation. In the case of South Africa, we had to partner with the bank directly initially, right? Just because they didn't have the equivalent of a payment on EMI license, right? You could act as an agent. So all these things, right, at the end of the day are sort of before even talking about the value proposition or even the go-to-markets, right, or how your brand and your product resonates to the end customers. These are still core foundational blocks, right, that made the journey very different from launching a bank or a digital proposition in Europe with Solaris in 3 to 6 months at most to a bit more than that here.
What are the fundraising myths versus operational reality? I mean, what you faced with, what were your expectations, and what you faced with at the end?
I'd say they're all true and not true all at once. I think I'm not sure if I had the expectation because I've never fundraised myself, right? I was part of, I was lucky enough to be part of some of contributed to some of the funding rounds at, various companies that was at, but at much later stage. So it was definitely a different experience, right? Facing, first of all, when it's very different when you're defending your own baby as opposed to to as an employee. Actually, there's much more, for the good and the bad. There's much more of an emotional factor in it. I would say that's one. Two, we thought honestly that we'd have an easier time raising. I think a few things right happened in the meantime. I think post 2021, 2022, I guess there was a bit of a market correction across tech in general, specifically fintech, right? So all companies, even Klarna, right, Stripe, and so on, had a major correction. That's one element of it, right? So I would say investors, particularly early investors, VCs, and so on, were much more reluctant to invest on a pitch deck, or right, at least the requirements went up, right? You needed at least some types of prototype or even a sign of traction, which wasn't the case back in 2021, to be honest, right? We would see. We've experienced in Europe, almost a golden age where, people were raising right and left. I think that's one. Two, the reality, especially in Africa, is that there's much less of a concentration of capital. If you look at a lot of European fintechs, and I'm thinking of a lot of French entrepreneurs always complain like, well, this is not Silicon Valley and so on. But if you look at the capital allocation in terms of, the whole fintech investments in the past year, I mean, maybe less than, I have to double check the number, but it's probably less than 2% was allocated to Africa as a whole, right? And then within Africa, you have sub-regions. So the reality it wasn't an easy path, right? Even though we had, a background, even though we had already something built, we had a prototype. I think there was a big part of education around the models, even though that model was proven in other parts of the world. But that's one. Two, there was a lot of education in terms of, I think there was a few initial models that appeared mostly on the B2C side, right? Early stage of digital banks in certain countries, but that didn't work because either, as I said, the foundational blocks were not there, or maybe the founders didn't have as much experience, or maybe the momentum wasn't right. So there was an initial image to digital banking that we had to overcome as well. So and then lastly, and most importantly, right, as two European founders, right, coming in completely new markets, new continents. I guess there was a lot of narrative building that we had to go through in order to convince investors. But just let me finish on this. The day we had our first South African investor was the day where we knew, I guess, something was at least going right. That at least someone locally believed that something was possible.
You're totally right when you said that European market has a much not simpler, but at least more understandable and transportable way for getting the license. For example, exist European regulations. By the way, this is the case when regulations helps. I mean, or a lot of regulations helps, because we in Europe, we know specifically that if there is, we want to just, we can select from different types of licenses like AMI, or maybe we just need to be a small payment institution somewhere, in a country just inside, and depends. So usually you can select from variety of licensing. You have a clear and understandable path for how to get this licensing, and everybody's aware about this. And the great advantage, of course, for Europe is that if you have a license in one European country, you can transport it and to passportize basically into another European country. And Africa is a little bit different because there is each country has its own regulations. Of course, exist some countries already aligned their legislations between each other, but are some different examples and isolated examples, I would say. And also the biggest thing is that biggest difference is that European market is more a market already prepared. It's a lot of things, so different products, different solutions, options, and it's prepared for something very mature, very heavy. When African market is a very dynamic market. It's also a market with huge potential. As far as I saw, it's a market where a lot of initiatives that in European Union doesn't exist, they have, because the regulations are different, and people and the market is hungry for good solutions. By the way, Solaris was also covered, when we worked at Solaris, also covered some hungry of the market, and demand of the market for banking as a service solutions. And what I see in Africa currently is that there is a huge market demanding good services, good product, and they are a lot of good products on the market. And what's the most important thing, as far as I saw, is the possibility to make remittance and send money via different African countries like we do in SEPA region. Maybe I'm wrong, but this is one of the features that if a product that is present in different locations in Africa will cover, then it will help African market, it will help the product to grow. Did you try to, I mean, you at Zazu, you're trying to solve this issue, or you're focusing on something different, on solving maybe other pains of the users? By the way, what pain at the beginning you wanted to cover when you created Zazu?
No, indeed, there are a lot of things to, especially when you look at it from the fintech eyes and what you've seen, outside of. Again, I always put the disclaimer that each market is very different. Even if you're in Europe, there's local nuances between Germans, Italians, and so on, and much more so in between Europeans and Africa and within African regions themselves or countries. So let's be clear about that. But our thesis was always very simple. Whether you're an entrepreneur or business owners in South Africa, in Kenya, in France, in the US, anywhere in the world, at the end of the day, the challenges that they are facing are very common, right? They just want to focus on their business. They don't want to, the last thing they want to do is to, spend more time doing the taxes, managing the invoice, and paying more fees to the bank, right? So that was always our core thesis, right? And we knew that, a very core and simple value proposition when it comes to accounts, payments, expense management done end-to-end online was already a sufficient MVP. Just because, we've done a lot of market research before coming in, whether that was in South Africa or other parts of the continent. What was common is that is a very, actually very similar to what we've seen in Europe or other developed markets, was that, the banks had built these monopolies over decades. They have left a major gap of certain of specific segments, right? Freelancers, maybe, for investing. I mean, if you look at it from different verticals, as you may call it, completely underserved, right? And this is where typically the fintechs in Europe, right, have come in and started, filling the gaps. The gaps that we've seen in South Africa and on the continent was specifically around, modern entrepreneurs, right? We've seen that whole new generation of I think there's a bit that myth, right? That Africa is, you have these entrepreneurs that, take over their parents' business and they're struggling. It's, I dare you to go to Cape Town, to go to Nairobi and so on. You have a whole new generation of, I mean, the average population is around 35 years old, right? These guys know software, they're using ChatGPT just like you are, right? So you have this whole new generation of new entrepreneurs that are entering the digital world that's going to sell online, and they are building the next, not out of opportunity, but really out of not out of necessity, sorry, but more out of opportunity. They're building the next SaaS, the next e-commerce and so on, right? And yet their best, default banking alternative was traditional banks, that's high street banks, right? That charges them high-end fees and really at the end of the day really structured for corporate, right? So that was always our core target market. The initial pain points that we solved, right, as I said, right, was as simple as having a business account that works online. That was already 60%, 70% of a lot of people. Either when they had to open their accounts, most of the time they were redirected to a branch or had to call their advisors. Or we're getting lost, in the mid. So simple onboarding, business bank account that works with the card was already a good foundation. And then what we've seen is that different nuances depending on the types of ICPs, right, of customers, right? So typically for entrepreneurs, what was key was being able to create their company online. Actually, we incorporated a partner there to actually, as they open their bank account online, create their company and having, their everyday business banking online. It's as simple as that, right? Number one. Number two, for everything around freelancers, right, and the one man's band, right, independent consultants and so on, invoice management was the best hook for them. This is where we see that they typically that's when they want to structure, and especially with you have more and more now an enforcement of digital invoicing or facturation electronique, as we say in French. And then lastly, another point for these scaling businesses, right, as soon as they start onboarding new hires and new people in their team, the ability to have rights and rules, right? To bring, a manager to actually being able to access the platform, your CFO to actually initiate or structure the payments. I mean, once again, these are very simple things, right? But today I'm in Morocco, and I was speaking with an entrepreneur yesterday that he told me that typically they share the banking credentials and even the cards, in between employees whenever they need to manage an expense, right? So, well, I would say core everyday banking online, and then specific nudges depending on the ICP.
Africa is different from Europe for a lot of reasons and for many things. And what one of the biggest difference is you already mentioned that average age of users in Africa is around 35 years old. I mean, for your product at least. The biggest difference between Europe and Africa is that we are facing absolutely totally different patterns, user flow patterns and user demands. Because when you are working with such a niche where people are having an age of 35, grosso modo, it means that all the time you have to be on track, providing new features, new absolute ideas, keep people all the time, motivated to use your product, because you have a competition, a strong competition, who can, if they're a little bit more, I mean, they are faster than you, they can provide features that you don't have, and users can switch. Because as you mentioned, for them, they know how to use the software, they're using ChatGPT, they're using a lot of tools. And for them, just to make a migration from one product to another, it's not so hard. It takes a little bit of time, but it's not so hard. And this is also difference between, as I mentioned, between a Silicon Valley pattern and or European pattern with African pattern. How you are facing with this challenge is absolutely unique. And I thought that your product is developing and trying to provide very good solutions for your customers, and keep on track with this. But speaking about coming back to the topic, our main topic, then Silicon Valley patterns that are not working in Africa, for example, what's the advice from LinkedIn or from, a book that is not working at all in Africa or in South Africa regarding fintech products?
As I said from the beginning, right, we're looking at it from a very different perspective, which is, convenience, right, efficiency in Europe, right, versus actual impact and solving actual problems, right. Again, if you go to Nigeria, right, that's that's the beauty of Africa, and Nigeria is a beast for that. Is that you go to Nigeria, it's super vibrant, and you see a lot of, even going to the street, you actually see a lot of business ideas, because people don't become entrepreneurs themselves, because they solve everyday problems by themselves. If something is not working here and there and so on, they'll find a way, right? So they naturally becomes entrepreneurs. But so as I said, right, I would say the main difference is that so we're looking at it from a very different eye perspective of where a lot of brands were very good in Europe because of branding, communication aspect of it, the design of it, right? And design is an important part of it. But I think there was a lot of noise, rightfully so. I guess there was a whole revolution of fintech, but noise sometimes was almost as important as matter in Europe, right? So we have great marketeer, fantastic marketeers, right? In South Africa, for example, they'll go through that noise, right? I think people, of course, marketing has a certain effect, but at the end of the day, they need a business bank account that actually from which to run their everyday business on, right? So whether you have a nice and shiny UX UI, that's a great thing. But if it doesn't work, if it's not if it's not solving the actual pain point and enabling them to actually at the end of the day be positive, at the end of the month we have a green line and access credits, right? It's not going to be the tool they retain, right? So I would say that's one of the main difference, that's as opposed to communication, branding, design, and almost to a certain extent, when you mention LinkedIn, maybe certain vanity metrics. Because I remember, whether it was at Solaris or certain companies, I guess the amount of likes and visibility was a big part of it, because that's marketing. These are not the metrics, at least at this stage, and in South Africa or on the continent that we are driven for, but much more around how do we solve and have real impact.
When you make noise for a fintech product, and fintech is a boom, it's easy to come on the market with a new product with a fancy design, and you can start. I think possibly some of our guests and the watchers are thinking that can be a solution. But I think the most important part of a fintech product is gaining the trust of a user for using your product and to continue to use it. Without the trust, it's basically, you can, of course, release a very interesting product with, as I mentioned, fancy design. People will come, will download it or whatever, access it via web, test it, that's it. What is the recipe of gaining a successful recipe of gaining trust of the customers in Africa?
No, that's a big point actually that I haven't brought up, but that's actually probably the most important difference with in between markets and particularly in Africa and within Africa once again. So, I'm here in Morocco now, where we're launching our second market, and interesting enough, most people do. Even people that have nothing to do with fintech or digital banks, they have quite a good understanding of how licensing works and how the central bank works. Don't know why. I think it's mostly it has to do with a bit how the political society is framed and how you have a few instances that direct the country. But all that to say that I don't know. But in the early days when I was using Revoluts and similar companies, the types of licensing behind or how my funds were kept was an afterthought. You kind of trust the system in some ways, right? And then eventually Revolut get their own license, and then you get to know about it. But it wasn't. It was more of an afterthought after the design and the efficiency, as I said, right? Well, again, here at people, the first question they ask is they want to understand how are you regulated and how do you operate before even looking at the product, right? So definitely the trust element is a big one, especially where the reality and similar to probably in the early days of neobanking in Europe, where people hate their banks, they hate their experience with their bank. It's terrible. But banks have the trust, not in the trust that the banks is doing, as my best interest at heart, and but rather that they will exist tomorrow and next 10 years, right? So the whole exercise that we have to do is finding the right balance between communicating around that we are actually operating under a partner's license, that we are following guidelines, and we are almost as operationally regulated as a typical bank, but with the beauty of a tech company and the magic of a fintech, and that's the challenge. So, and one last point is in terms of trust is we quickly realized that we don't want to speak to the whole market, right? We don't want to spend our time trying to convince someone that is I don't know, as a service-based type of company that is not ready to adopt us, right? As opposed to, really focusing on our core early birds that, the value resonates. They've seen, as you said, they've seen what's going on outside of some of them have opened accounts at Mercury because they incorporated in the US, right? And these guys, our product resonates with. That's much earlier, right? To spend time with them and then to eventually have a word of mouth than trying to convince, customers that do not get your vision, that will never or not likely to be switch anytime soon, and eventually will lead you to waste time and money.
If to write the playbook for opening and launching fintech products in Africa, what will be the page one? I mean, what you will write on page one?
You have to have strong guts, right? You have to have strong stomach because it takes time. There's a lot of education to be done at every level, the customer level, at the partner level, at the customer and investor level. So you gotta be in there for the long term. You gotta brief the local markets. But look at one entrepreneur told me, because we're discussing about these challenges, right? It is to build in Africa when certain pieces of the infrastructure are there, but some of them are missing. And he told me something interesting. He said, "Look, that's the cost of building for blue ocean strategy." Right. He said, at the end of the day, yes, it's difficult. We have challenges, but at the end of the day, I'm the only one solving for 50 million businesses, right? So I would say that's what the first line of the first page of the playbook would look like. Have a strong stomach and be there for the long haul if you truly want to solve for a major opportunity like Africa is.
I advocate all the time the idea that if you're doing business in Europe, you're doing a fintech business in Europe, once a year, just go to another country, not in European Union or European continent, and go somewhere in another region, like in Africa or Central Asia. Just go spend some time there as a tourist, for example, and try to see and try to connect with local communities of fintech entrepreneurs or fintech products, and try to see what's happening there. Because, for example, Africa and Central Asia, Kazakhstan, Turkmenistan, Tajikistan, those regions, both of these regions, one side is a continent, another side is a half of a continent is a region. They're super vibrant, as you mentioned, also vibrant in the way how they're developing products. The needs are basically the same as in Europe. You want, as an entrepreneur or as a simple user and as an individual, you just want a simple, clear banking, or as an entrepreneur, a simple, clear invoicing, not too many headaches with taxes, with invoices, with papers, and so on. But the approaches that are happening in different regions and regions around Europe are totally different. And when I travel into those regions, I see that absolutely there are different trends. People can use and tokenize. For example, they can tokenize, I don't know, eyes or a palm, even, for example, for payments. They can use much more simple approach to, interact with the customer, to give him the solutions that, fortunately, we cannot. We cannot do this here in Europe because maybe of the regulations sometimes, but sometimes because we never thought about this. African region is totally, for me, is absolutely an interesting market only because because of the people who are living there. People all the time are the biggest heritage a country can have, the biggest active a country can have, or a region. And those people in Africa, they have the same needs as people in Europe or United States, but the way how they solve it, the way how they want to interact with it is totally different, because they want it quickly. They're young. They don't have time to wait for another release that will happen in years with some new features. They want it now. They want it to be quick. And this motivates all the time, products on African market, on fintech companies on African market, to deliver also very good ideas and also good things. We have challenges in Africa, by sure, with difference between legislation and regulations in different countries, and these provide much more challenges, like, for example, in European Union, because in European Union, Revolut or Solaris or N26, they just can passportize their license, basically, and operations. In Africa, it's not the same. Anyways, it was absolutely a pleasure to see you, Germain. We don't have so many guests from Africa. We had only several people from there as a guest at Fintech Garden Podcast. For us, it's very important to hear the feedback of people that are living and working in Africa. Mostly the people who worked and lived in Europe, and now they're developing a fintech product there, because your experience is absolutely unique. And we are very happy and thankful that you accepted the invitation to come to the Fintech Garden Podcast. Great success, big success, and great luck for you and your company you're running. That's it, basically. To all of our watchers and viewers, please subscribe to our channel, likes, of course. We are very happy for any comments and any feedbacks we're gathering. Some of the feedbacks we're gathering via emails or YouTube comments, we return back privately and we discuss. And thank you for different users that gave us some good advices and ideas for new interesting topics. So press subscribe, continue to watch us. We will come in future, in this year, 2026, we'll come with a lot of new interesting shootings and interviews with different people from different regions around the world. And it will help for the fintech community around the world to gather, very good and insightful information all around for developing good products.